Hey guys, Glenn here from VectorVest. I know you've seen our ads for the hot stock panels that we do every month. Well, I want to show you a few of the big winners from last year's panels. Folks, there's a lot of information. I want to show you the power of the VectorVest software, but the insight that you get from our guests here on this channel is invaluable. We tell you more about the company, why we like the company, and we do the VectorVest analysis to put you into the right frame of mind of knowing, hey, this may be a good stock to take advantage of. Some of these winners have gone up in excess of 300% since the time we did the panel. We're going to start off with Steve Chappell's pick from the Hot Stocks for Swing Trading panel. It was done in February of 2020. So let's take a look.
So I'm going to focus on a couple of stocks today. One that I picked a while back here in the same stock picking panel. I actually gave guidance on when to buy it. I think there might be another opportunity with it. It's called ENPH. And then we're going to get into this Teradyne. There is an inherent difference between these two stocks. And here's where the beauty of VectorVest kind of already steps in, is even looking at this list, we can get a good feel for the kind of stock that we're getting ready to look at when we really focus on just two numbers in my mind. I'm going to look at the RV and the RS relationship on an ENPH compared to a Teradyne, and there's a distinct difference. So when we look at the ENPH chart here in a little bit, I want you to frame that from the lens of an aggressive investor. ENPH has an RV of 1.64, which is extremely strong, and the reason why, that's upside potential by the way, the reason it's so strong is because of the incredible growth that the stock has been exhibiting. In fact, I owned a good piece of it last year from January into about June. And I didn't get all of this, of course, but the stock was up about 264% at one point. Had some substantial retracement, as you might imagine, on the back of that, and has reemerged. But really what drove all of that performance was not only the fact that they're growing quickly, but they're also became profitable on a forecasted basis. So the RV is in large part a reflection of the earnings power of the company. Okay? Now, what has yet to be established is consistency of that earnings power, right? They're just breaking ground into being steadily profitable on a consistent basis. So the RS number is not very high, but again, it's because they're still on the emerging side of the space, okay? They find themselves in the solar energy space along with companies like SolarEdge and a few others. First things first, I believe we've got the charts in the correct order. We're going to be looking at the aggressive chart first, and then we're going to be going to the more conservative buy the pullback approach. Okay, so I'm going to open those charts for you now.
Well, you have to reach. There you go. Okay.
And let me get over here. All right, and so here's ENPH. I've got a line drawn across ENPH. This was, I believe the last time I was on the panel was sometime back in either October or November of last year. It's been a little while. And we had picked ENPH, and ENPH was starting to show some signs of life through here. And I said, look, if ENPH can get back above this area here, that's a strong area of what was support or resistance that became support to resistance again a couple of times here. If we can just get back above there, it looks like a really terrific buying opportunity because earnings is still growing all the while. And I'm not going to get into the stories about why it sold off the highs, although there's some entertainment value there. Bottom line, a lot of folks were saying things that they probably shouldn't have said in a variety of platforms. Okay, but earnings growth persisted. It's begun to tail off a bit here now. But if $35 was achievable on 60 cents forward EPS, I certainly still feel like there may be a little juice left when we're dealing with $1 on a forecasted basis at the same price level. Maybe not quite as attractive as it has been, but still I believe some further upside potential exists here. One of the things that's happening on a current basis here is, see where I drew that line? That was resistance way back. Today you had a retest of that area even today. So as they exhibited their breakout, this is very common. It's sort of technical analysis 101. A lot of times you're going to get a retest if it's a very significant level like a new high, okay? And that's already underway here, and so far so good. The bulls came right in and met them, and we'll see where we go from here. Bottom line, I like the stock if it goes above the high for today. At some point over the next couple of days, I wouldn't stretch it beyond that. Reason I wouldn't stretch it beyond that is because earnings comes up for them on February the 18th. And you don't want to be entering into a new position just days to less than a couple of weeks before those announcements are made. So I think there's a limited opportunity here. Having said that, we get on the backside of earnings in February 18, and these guys hit it out of the park again. Ooh. This stock is going to be super attractive. So I think this is one, if you want to play things as close to the vest as possible, you just put in your watch list. You hold it till after February the 18th, and if the market's still going up, earnings is hit out of the park like they've done the last 3 times in a row, this will be a big winner.
So Steve made a great pick. He explained what the stock was all about. He looked at the power of the VectorVest software to explain why he pulled the trigger on the stock. You remember when he was looking at the stock was trading at $38. Look at what it's trading at now. It's trading at $196.18. That's a heck of a move. A couple of other things that were going on. Well, at the time that he did the video, the relative value was at 1.64. It's pulled back, but it's definitely in a nice level, saying that this stock's got great upside potential. The relative safety was at 1.07. Now, with all of the earnings potential behind the stock, it is now at 1.35, making it a less riskier stock to get into. Now, last thing I want to talk about is the earnings growth rate was sitting at 48% back at the time of the video. It's still growing their earnings at a clip of 30% a year. So let's do this. I'm going to right click on the stock. Let's view the stock graph. The stock was up from the time that he did this video, up over 390%. Well, if I'm looking at it now, is it too late? Well, I've got a lot of basic stuff on the graph. I've got my levels of support and resistance, and I've got a 20-day exponential moving average. Also down below, we have relative timing that tells us that the stock is still in an uptrend. And as I look at the graph, the stock's price recently did 2 things for me. It went above my level of former resistance of 189.31, and it is clearly above the 20-day exponential moving average. Now, right now, it is sitting in a little bit of a channel between 221.93 and 180.31. If I'm going to play the stock right now, make sure you're buying it on the day that it's rising. I'm going to give you a profit target right now of 221.93. That's a good little piece of profit that you can make. And again, Steve, that was a great pick. The time is still okay to buy as long as you buy on an up day and your potential profit is going to be at that level of resistance. So there you go. So that was the first pick from a hot stock panel that was done in February of 2020. Now, let's get into our next stock, which was done for our low price hot stock panel. It was done in March, the next stock is FLGT. And it was up 198% from the time that we did the analysis on the hot stock panel. Let's take a look.
Fulgent Genetics. FLGT, same kind of scenario over the last year, moving higher. A little bit more jaggicity. Yes, that's a Glenism. A little bit more jaggicity than the other stocks that I just showed. But again, looking at these levels of support and resistance, breaking above and below, gives you a good sense of when the right time is to buy. Love this level of resistance, broke through, put this and love the earnings per share. Put this on a 3-month graph. Look at that breakthrough of resistance right here. Breakthrough, follow through, 3.8 follow. The 3.8 cross actually before the breakout. Look at that run up to the high. How about getting out when the 3.8 cross? To the downside, it falls back, tests this former level of resistance as a level of support. Beautifully done. Right now, a little bit of indecision on the day. Would love to see if the 3.8 can cross. Not a lot of trading days still left, but some trading days still left. Today looks like it may fall short of trading in its average volume range today.
So that was stock number 2, and that was done on our 10 explosive low price hot stocks for the month of March. Let's take a look at it now. So if you remember from the video, the stock was trading at $17.27. Currently, it's trading at $161. Wow. Now, interesting, we look at the relative value, the stock's long-term upside potential, still in play. This stock has got great upside potential. The relative safety is above the value of 1, not by a lot, but making it a little bit less riskier of stock. The stock is in full-blown upward mode right now, where the RT is sitting at 2. The stock is full bore, go. Also, what I like about the stock is that it's got an earnings growth rate of 51%. This company grows its earnings at a clip of 51% a year. And remember, from the time that we did this hot stock panel, this stock is up 198% thus far. That is a big move, but the power of the software was able to bring you to this kind of stock. All right, so the next stock is GRWG, that's Growth Generation. And this was done on our hot stock panel to finish the summer strong. It was done in August of 2020. Let's take a look at the analysis.
All right, next one's going to be Grow Generation. All right, so there's two marijuana stocks that I would be a big proponent of. One is Innovative Industries, which is IIPR, trades right now at about $117 a share, but has all the upside in the world because it deals primarily with the real estate involved down the line. Obviously, if Democrats take full control over every major office, I think you could see some marijuana legislation in the future. So just like with clean energy, I think you're going to see a pretty good run-up in marijuana-based corporations heading into at least the election, and maybe a giant leap on the back of the election, depending on outcomes. So I think playing something in the space makes sense. I would go either IIPR or, in this case, Grow Generation is what I chose. I realize they're trading a little bit overvalue right now, but as we go through the rest of the columns, first one we come to is RV. That's your upside potential indicator. It looks at whether you're better off longer term on a similar investment, a AAA bond, or here in the particular stock. What this is telling you is they're growing earnings at such a rate that you're traditionally going to be much better off buying this stock. Okay, anything above 1 is good. Anything above 1.4 is excellent. So we're coming in at 145, tremendous number there. If Glenn takes his cursor and goes to the right-hand edge, you'll see why. They're actually turning a profit already, even though they're trading less than $10, and they're growing that at 44% a year. So I think they're making 21 cents on a forecasted basis, but growing it at 44% a year, just a little bit more. I think COVID might put a little bit of a damper on some of their plans, but they are expecting to have 90 stores by 2023. So it's a tremendous high growth story. And what I like about them is they deal with helping you grow the product. So again, it's a lot like IIPR, dealing with the real estate. You're not as pinned down to, is everybody going to be buying my crop? More so, are they going to need, my fertilizers and my hydroponics and my all this to grow an even better crop? So I just think it's a smarter play. I think picking the winner, as we've seen Canopy Growth, we've seen Aurora Cannabis almost go bankrupt, by the way, and they were one of the big 4 leaders just a couple years ago. So I think growers are extremely volatile and extremely risky. I think I'd play broad market here, and I'd go with something like Grow Generation. And one thing in VectorVest you can always do, guys, is right-click, and you can view stock analysis report and learn a little bit about the companies this way. Here it says, Grow Generation Corp engages in the retail of hydroponic and organic specialty gardening products. It offers lighting fixtures, nutrients, seeds, growing media systems, trays, fans, filters, humidifiers, dehumidifiers, timers, instruments, water pumps, irrigation supplies, and hand tools.
That's a lot of stuff.
All right, so Steve set that trade up knowing that there's a possibility that there could be legislation decriminalizing marijuana. So he was right on point with that. And with the change in the current administration now, it looks like it may be at a point where it's looking at being decriminalized. Let's take a look at it now. When Steve first did this video, the price of the stock was trading at $9.19, and currently it's at $60.58. It is still overvalued. Well, that just means that the price of the stock, people are willing to pay a premium to own the stock. The relative value at the time in the video was at 1.45. While it's right now is at 1.22, still above the value of 1, the stock still has good upside potential. The relative safety at the time in the video was at 0.87. It is now at 1.07. It is now making it that it's a less riskier stock to get in right now. And the earnings growth rate at the time of the video was at 44%. They are still growing their earnings at a clip of 43%. As Steve mentioned, by the year 2023, the company is looking to have 90 stores out there for helping people to grow their marijuana product. Let's take a look at the graph. Is it too late to get into it? Well, let's take a look. Here's the last 1 year. This stock from the bottom left to the top right looks good all the way around. As I look at my levels of support and resistance, the stock is currently bouncing off a level of support above the 20-day moving average, hitting a new high. Always make sure that if you pull the trigger on a trade, that you're buying on a rising day. So keeping all of that in mind, that was an excellent pick. There was a lot of great analysis behind it, thus making it, during this panel, this stock is up over 330% from the time that we presented it in the hot stock panel. Way to go, Steve. So that was a great pick by Steve, and the 3 picks that we showed or showcased in this video were some of the biggest movers. But I've done some analysis, and I looked at the top 3 stocks from all of the hot stock panels for the year of 2020. Let me show you what I found. So as I go back in time, I look from February of 2020 to March to April and May and so on, and I tested them from the day that we did the analysis in the hot stock panel all the way up to the end of 2020. And you can see that we found you some stocks to really take advantage of. ENPH, Teradyne, Apple, back in March, Flugent, Teradyne, Dava. You'll notice that some of these stocks show up time and time again. You're missing out on opportunities not to take advantage of them. But this was just a brief rundown of the top 3 stocks from each stock panel that we've done for the year 2020. And as you can see, we've given you an opportunity to make some money. I want to say thank you for watching this video. If you found it useful, make sure that you show up to our hot stock panels on a monthly basis. You'll see the advertisements for them. Folks, if you haven't already, subscribe to the channel and always hit the bell icon so that you will be alerted to any updated content that you find here on our channel. We'd love for you to subscribe. Always remember too, if you like the information that you see, hit the like button. We're trying to grow this channel, but we are trying to put out the best information that we can to help you become better investors and traders in the market. So until the next time, have a great day.
Yeah.